Welcome, my name is Vishal Tekshilani. Today I'm speaking to David Kirk, the CEO of Bailador Technology Investments, a listed investment company that invests in early stage technology growth businesses. David, it's so great to have you here.
Good to be here, thank you.
No worries. So David, you're the former CEO of Fairfax Media, a big exciting media company, and you've moved on to Bailador Technology Investments. Give us a bit of a background on this company.
Yeah, sure. Bailador Technology Investments is an ASX listed fund. And we invest in private information technology companies at the growth stage, which is the stage where they're already well established in Australia and New Zealand, probably typically $5 to $10 million worth of revenue, well established technology, but looking to scale and grow quickly, usually outside this part of the world. So we really help companies go to the world, take their technology to the world.
Okay, and I think before the interview you'd mentioned a lot of these founders, they're in their 30s, they've found a market gap and they've targeted that, they've gone for it. So there's a lot of interest from them to make this succeed, isn't it?
Well, it's quite interesting, you're quite right, you know, they are older, a lot of our founders. Not really quite sure why, but the whole sort of paradigm of the 20-year-old in the garage living on takeaway food and building the next thing to make them a billionaire, I'm sure it exists, but really we're seeing people often who have had somewhat of a career in the industry in which they build the tech, either because they are tech people themselves from that industry, or because they just come out of that industry and they recognise that there's a big opportunity here. This is a very inefficient way of doing things. Technology can help, and they find a tech partner and they build the business. So most of our businesses, we typically focus on software as a service as a business. So most of them are doing what has been done in the past very inefficiently and very slowly and sometimes quite inaccurately, doing that much better and much cheaper.
Okay.
And so people who are mature these days in their early 30s, so not exactly super mature, but in their early 30s, those people are great partners to have.
All right, excellent. So let's talk about some of the underlying portfolio and some of those exciting investments you have. Which are, say, 2 out of the 10 in your portfolio that you're really excited about?
Well, we have to start with the big one,
Sure.
the one that's been most successful and one we've been in for quite a while. It's a business called SiteMinder. It's probably the biggest, best, fastest growing, most global tech company in Australia that no one's heard of.
Okay.
And that's because it's a business-to-business business. It provides software which helps hotels or allows hotels to connect with literally hundreds of sources of bookings. So they sit between a hotel's property management software, the sort of front desk software you see when you go into a hotel. They connect into that, and then they connect into all of the online travel agents and lots of other sources of bookings for hotels. So they sit right between the hotel and the booking.coms and the Expedias and the Agodas and the Ctrips and the TripAdvisors, all of those sources of bookings. And they're by far the leading proponent in the world of that.
Okay, and the second one?
Well, just quickly on SiteMinder as well, they've got 30,000, I love SiteMinder, it's doing well, people should know it. It's got 30,000 hotels in a market of 250,000. It's 3 times the size of its next competitor and doing extremely well.
Oh, great, okay.
The second one I'll talk about is actually a business we listed. We've already had one exit on listing onto the ASX, and that's part of our model, of course, to invest, to grow, and then to exit by listing, and that crystallises value and allows people to take it away or to leave it in. But that's Straker Translations, which is an online language translation platform.
Right.
And that comes out of New Zealand, actually, out of Auckland, but listed on the ASX now. And they combine technology to do machine translation with machine translation and human translation. They crowdsource something like, they've got about sort of 11,000 translators in 80 source languages and 80 target languages, and they are the fastest, most efficient translators of
so what's the application for their translation services?
It's almost, or the fastest growth component is cross-border commerce. So if you think of all the people now building their websites and trying to sell their products in multiple jurisdictions around the world, they need to get marketing material together to be able to sell to people in other languages.
For example, someone who makes a business in Germany, they need an English translation on their website this week.
Correct, and a French and an Italian and Spanish and a Portuguese and a Russian if they're brave enough to go to Russia. So, yeah.
Okay, that's exciting. Now, so a lot of your businesses, they've seen their valuation increase. What happens when an investment doesn't pan out?
Yeah, and that happens. We've got 10 investments in the portfolio, and we've written one down, and we've written it down quite savagely, if you like. We've written it down by 70%, because the business had a good model, was growing, had a good opportunity, but we miscalculated, basically, and the management miscalculated, and the business stopped growing. It hasn't blown up or anything. It just stopped growing at the same rate it was growing at previously. We've had to redirect it into other markets. Okay. So then we write it down, and we write it down quickly. We work. We never give up on them. We work closely with the management. Yeah. I mean, from time to time, we will need to write businesses off, and we have written one business off in the past. But that was mostly because we just could not get alignment with the chief executive, who was the founder, about how to run the business.
Okay, and that's one of the risks people should be aware
of.
You know,
that's definitely one of the risks.
To get good businesses, but sometimes look, it just doesn't work out.
Well, it's the benefit of a portfolio. You've got 10 companies in the portfolio, and that gives you it really helps you with the odd one that might not go so well.
Okay. So I think on NabTrade, we've got a lot of listed investment company investors. They're very savvy, so they'll be looking at your portfolio valuation, the NTA, and then they'll be looking at the share price. Can you provide some color around the discount?
Yeah, well, the discount is considerable, and that's an opportunity for savvy investors, I think. But I think there are 3 reasons why we've got quite a discount, and I think it's important to think through those reasons, because that gives you good flag of when that discount might close considerably. I think the first one is because we're investing in private companies, there's not the same opportunity to see all the underlying metrics on the companies.
Right.
We have confidentiality agreements with our other partners in the private companies, and that means we can't just publish all the great detail about the growth rates and the size and the customer base and all that sort of thing. And sometimes it's just not, for businesses of that size, it's not commercially sensible to do that either. So I think that's the first thing. I think the second thing is people will be waiting for us to have some significant exits. And when we exit companies, it's all very well to mark companies up in the book, but when you actually exit and all the cash comes in from them, then people can say, yes, that clearly was a great company, and it's been able to be realised for cash. So I think we're still waiting for that a bit. That said, our valuation methodology is really only to mark things up on the basis of third-party investments, unless they've run beyond a year with no further investment. And we've had 18 third-party investments into our portfolio, 18, and every single one of those has been at or above the valuation we've been holding it at. So that's good validation for people that we do hold things at a conservative valuation.
What are some of the fee considerations for investors? If they were to look at your listed investment company, what are the things they should know in terms of fee structure and anything else?
Yeah, this is a venture capital or private equity style investment, investing into private companies. The typical investment structure for those is a fee of 2% of the net asset value, the assets that are being managed. We're only 1.75%. We thought that was appropriate for the type of investing that we're doing. So 1.75% of the net asset value every year, so it's annual, and then 17.5% of the gain, so long as we have achieved a compound 8% return for investors. Okay. If we're below that, we receive nothing. If we're above that, we receive 17.5% of the gain, and that 17.5% would compare with sort of 20% of the gain for most private equity and venture capital funds.
Okay, so David, this all sounds very, very exciting. Thank you for coming in.
You're welcome. Thank you. It's great to be here.
I hope all those entrepreneurs achieve their dreams and bring you a lot of valuation growth
in
your portfolio. No worries.
Thanks.
I hope you enjoyed this video. Now, please remember what we talked about today isn't investment advice. If you're thinking about investing in Bailador Technology Investments or any other listed security for that matter, it's really important that you do your research and please consider seeking financial advice. My name is Vishal Texanani, and I'll see you next time.